Matthew forged lease releases filed in public records, 100 properties mortgaged twice using names you
I worked
invented.
in real estate financing, and every document I filed with.
This is Matthew Bevan Cox. He kept his own detailed records of how he erased other people's mortgages and stole their homes. And those records are now Exhibit A in a federal case that ends with 26 years.
Wiped existing mortgages off the record on paper so you could borrow against the same house
I'm not
again?
going to address any property filing or any identity without my attorney here, right?
He would not get the chance to talk his way out of this one. By the time federal agents pinned him against the front window of a Nashville pawn shop in late 2006, Matthew Bevan Cox had been a fugitive for nearly 2 years. Behind him sat a trail of more than 100 victims spread across 5 states, roughly 125 properties touched by his pen, and almost 50 identities he had assumed, invented, or stolen. The federal sentence would eventually run 26 years. The clouded titles he left behind across multiple jurisdictions would outlast the prison term, and in some cases, they still have not been fully resolved. Before we keep going, I want to ask you something. If you own a home, when was the last time you actually pulled up the public land records on your own property and checked what was filed under your address? Most homeowners never do. That single blind spot is what made this entire scheme possible. Drop a comment with the city you're watching from, and hit subscribe if this is the kind of accountability coverage you want more of. This channel covers white-collar predators every single week, and the stories only get worse from here. Matthew Bevan Cox was born in 1969 in a middle-class subdivision outside Tampa, Florida. His father worked as a regional sales manager for a paper products distributor. His mother kept the books for a small medical office in Brandon. The Cox household, by every account from neighbors and former classmates, was unremarkable. Lawns mowed on Saturdays, 2 sedans in the driveway, a small fishing boat in the side yard that came out twice a year for trips to the Gulf. He was a quiet, observant child. Teachers at Riverview Elementary remembered him as polite, organized, and unusually good with numbers. By middle school, his report cards described him as an attentive student who finished his work efficiently and asked careful questions. By high school, the language had shifted slightly. Capable, but reserved. Strong written work, less engaged in group settings. Shows real talent in art and design. That art talent would matter later than anyone could have known. After graduating from high school in 1987, Cox enrolled at the University of South Florida, where he studied art and graphic design. He was not, by his own later admission, a particularly diligent student. He cut classes. He drifted between majors. What he did do, consistently, was draw. Friends from that period remembered him sketching constantly in spiral notebooks. Logos, letterheads, document layouts, handwriting samples copied from magazines and yearbooks. He could replicate any signature he saw within a few tries. At parties, he would sign a friend's name on a napkin and pass it around as a parlor trick, and people would laugh at how perfect it looked. He left USF without finishing his degree, and spent most of the early 1990s drifting through jobs in Tampa and Bradenton. He worked at a sign shop hand-lettering plastic letters onto storefront marquees. He worked at a printing company in Brandon that produced wedding invitations and business cards. He worked briefly at a title company answering phones, which was the first time he saw, up close, how a real estate closing actually worked. He saw the stack of documents. He saw how few of them anyone actually read all the way through. He saw how the signatures got notarized in batches at the end of the table, while the buyers were already opening the bottle of champagne. By the late 1990s, Cox had transitioned into mortgage brokering. Florida was in the early stages of what would become the housing boom of the 2000s, and the barriers to entry in the brokerage business were almost nothing. A state license, a desk at a small firm, a phone, and a fax machine. He was good at it. Colleagues at his first brokerage in Tampa described him as charming with clients, patient with paperwork, and remarkably calm during closings. One of his early evaluations called him a natural with first-time buyers, and noted that he reads the documents more carefully than most loan officers I have worked with. That was the part nobody understood at the time. He was reading the documents more carefully because he was learning what could be changed. In 2000, Cox opened his own small brokerage office in a strip mall just off Dale Mabry Highway in Tampa. He had a partner for a while. He had 2 assistants who answered phones and filed loan packages. He drove a leased silver BMW. He bought a condo in South Tampa, then a second one near the airport. He was, by every external measure, a successful young mortgage broker in a booming market. The first known fraud came in 2001. Cox originated a loan for a client whose stated income did not match the application or the supporting documentation. The bank funded the loan anyway. The client defaulted within months. The lender investigated. Florida regulators opened a file. Cox was eventually convicted of a state-level mortgage fraud charge in 2002 and lost his Florida mortgage broker's license. He served a brief probationary sentence. He paid a small fine. He told his family and his girlfriend at the time that it had all been a misunderstanding, that he had been the one taken advantage of, that he was getting out of the industry anyway. It was not a misunderstanding. It was a rehearsal. By the time the state stripped his license, Cox had already begun mapping out a much larger scheme. He had spent 5 years inside the mortgage industry. He understood, in granular detail, how loans were originated, how titles were verified, how liens were recorded, and how all of those systems quietly failed when the documents in front of them simply looked official enough. He understood that the entire machine ran on trust in paper, and he understood that paper could be drawn. To understand what Matthew Cox did next, you have to understand what a county recorder's office actually is. Most people, including most homeowners, have never set foot inside one. In every county in the United States, there is an office, sometimes called the clerk of court, sometimes the recorder of deeds, sometimes the register of deeds, where documents related to real property are filed. Deeds, mortgages, liens, easements, satisfactions of mortgage, lis pendens. Every transaction that affects who owns what and who has a financial claim against it is supposed to be reflected in the public record of that office. The recorder's job, by statute in nearly every state, is ministerial. That word matters. Ministerial means the clerk accepts the document, checks that it meets basic formatting requirements, stamps it with the date and time, indexes it, and slides it back across the counter. The clerk does not verify that the signatures are genuine. The clerk does not call the bank to confirm that the mortgage has actually been paid off. The clerk does not investigate whether the notary stamp is real. The recorder's office is, by design, not an investigative body. It is a filing cabinet with a counter and a stamp. The trust in the system comes from the layers around it, from title companies that search the record before issuing insurance, from banks that conduct underwriting before funding loans, from notaries who, in theory, verify the identity of the person signing. The recorder simply records. For decades, this worked well enough. The cost of forging documents to commit large-scale title fraud was high. The technology required was specialized. The patience required to weave fake identities through multiple closings was beyond most criminals. The system depended on the inconvenience of fraud more than on its detection. Matthew Cox had spent 5 years studying every weak point in that system from the inside. He had a graphic design background. He owned a printer, a flatbed scanner, and access to high-resolution color copiers at any 24-hour print shop in the state. He knew exactly what a satisfaction of mortgage looked like in Hillsborough County, Florida. He knew exactly which clerks reviewed which kinds of filings. He knew which notaries asked questions and which ones did not. What he was about to demonstrate, repeatedly and at scale, was that the recorder's stamp confers a kind of legal magic. Once a document is filed and indexed, it becomes the record. Until somebody proves otherwise, in court, with money and lawyers and years of patient litigation, the record is the truth. A forged satisfaction of mortgage, filed at the counter and stamped by a clerk who did not look twice, becomes a real satisfaction of mortgage for every practical purpose downstream. The lien it discharges, in the eyes of every future title searcher, every future lender, every future buyer, is gone. That blind spot was the entire scheme. The first piece Cox needed was identities. He could not file fraudulent mortgages under his own name, not after losing his Florida broker's license in 2002. So he built people from nothing. He started with the dead. Walking through cemeteries in Hillsborough and Pinellas counties on quiet weekday afternoons, he photographed headstones of children who had died young in the late 1960s and early 1970s. Those names would have Social Security numbers that had been issued by the federal government, but had never been built into adult credit files. He cross-referenced obituaries at the Tampa-Hillsborough County Public Library. He sent away for certified copies of birth certificates from state vital records offices in Florida, Ohio, and a handful of other states, using mail drops in 3 different cities so the requests never traced back to his condo. When the birth certificates arrived, he used them to apply for state identification cards and driver's licenses. He used the IDs to open bank accounts, secure mailing addresses, and request duplicate Social Security cards. He built credit on each invented identity slowly, a secured credit card first, then a department store card, then a small auto loan. Within 12 to 18 months, each invented person had a clean credit file in the high 600s, with 2 years of on-time payments and a stable mailing address. He also harvested identities from the living. According to federal investigators, Cox approached homeless men in the parks and shelters of Tampa and St. Petersburg, offering them small cash payments for personal information. He told them he needed Social Security numbers for a survey, or for a job placement program, or for a class action settlement he was helping process. He paid in 20s and 50s. Many of those men would not realize for years that their names and numbers had been used to take out mortgages on houses they had never seen in cities they had never visited. With identities in hand, Cox went house hunting in the public record. He looked for properties owned outright, or nearly so, by elderly owners. He looked for second homes and vacation properties. He looked for houses where the mortgages had been paid down over decades, leaving most of the value as equity that a new lender would happily lend against. He pulled the existing mortgage documents from the recorder's office and noted every detail: loan number, lender name, officer signature, recording date, book and page reference. Then he sat down at his computer and drafted a satisfaction of mortgage. A satisfaction of mortgage is the document a lender files when a loan has been paid off in full. It tells the world that the lien is released, that the property is now free and clear of that particular debt. Cox drafted satisfactions that mirrored the format of each original lender's actual filings. He matched fonts. He matched language. He matched margin widths. He forged the signature of the lender's officer, often using signatures he had scanned from other recorded documents in the same recorder's office. He stamped them with notary seals he had ordered through online services using one of his invented identities. He walked the forged satisfactions into the recorder's office himself. He paid the filing fee in cash. The clerk stamped the document, indexed it, and slid it back across the counter as a recorded public record. From that moment, in the eyes of every title company, every lender, and every future buyer, the original mortgage on that property was paid off. The house was now, on paper, debt-free. With the lien wiped, Cox went shopping for new mortgages. Using his invented identities, he applied to lenders for cash-out refinances and home equity loans against the equity now showing on the property. He inflated the appraisals where he could, working through compliant appraisers, or by submitting comp data that overstated neighborhood values. He used closing agents who did not look closely at out-of-state ID. He sometimes layered 2 and 3 loans onto the same property in quick succession, before any of the lenders realized they were all claiming first position on the same house. The proceeds wired into bank accounts controlled by Cox under one identity, then moved to another, then another. The original homeowner, who often had no idea any of this had happened, kept making payments on a mortgage that, in the public record, no longer existed. The new lenders began calling about loans the homeowner had never taken out. Title companies opened files. Lawyers got involved. The clouded titles started accumulating, one house at a time, across county after county. By 2003, Cox was running this scheme across multiple counties in Florida. By 2004, he had expanded into Georgia. By 2005, North Carolina and Tennessee. He moved constantly between cities. He used mail drops in cities he no longer lived in. He kept files of identities and properties on a laptop he never let out of his sight. And while he was running it, he started writing a novel about a mortgage broker who runs exactly this kind of scheme. He titled it The Associates. He emailed chapters to acquaintances in the industry, asking for feedback on the realism. We are about to get into the part where it all started to crack. If you have made it this far, you already know this case is different from the usual fraud story. Subscribe and hit the bell so you do not miss what happens when federal investigators finally figure out who they are actually chasing across 5 states. These cases deserve more eyes on them, and the courtroom payoff in this one is worth the wait. The unraveling started, as most of these things do, with a single phone call. In the spring of 2003, an elderly woman in Tampa named Eleanor Pruitt received a notice from a mortgage servicer she had never heard of. The notice congratulated her on her recent cash-out refinance and provided her first payment coupon for a monthly payment of just over $2,400. Eleanor was 78 years old. She had paid off her 3-bedroom Tampa home in 1998. She had framed the payoff letter and hung it on the wall by the kitchen. She had not applied for any refinance. She called her daughter in Jacksonville and read the notice out loud, twice, because she thought she must be misunderstanding something. Her daughter drove down to Tampa that same weekend. They sat at Eleanor's kitchen table with the new servicer's notice, her old mortgage payoff statement from 1998, and the phone. They called the servicer together. The servicer assured them the loan was active in Eleanor's name, originated 3 months earlier, secured by a first lien on her Tampa home. They asked for the closing documents. The documents arrived in the mail a week later. Eleanor's signature appeared on every page. It was not her signature. The driver's license photocopy attached to the file was a woman she had never seen. The Pruitts filed a police report at the local precinct. Tampa police forwarded the file to the Florida Department of Law Enforcement. Within 60 days, the case landed on the desk of a Secret Service financial crimes task force that had been quietly monitoring a cluster of suspicious satisfactions filed in Hillsborough County over the previous 18 months. The Pruitt case was not the only complaint. By the time agents looked, they were sitting on 5 similar files. By the end of the year, 12. By mid-2004, more than 30. The pattern was unmistakable. Elderly homeowners, long paid-off mortgages, forged satisfactions of mortgage filed at the county clerk's office, brand new refinances issued to people whose driver's license photos did not match the actual homeowners they claimed to be. The Secret Service assigned the case to Special Agent Karen Whitfield, a 15-year veteran of the Financial Crimes Division who had worked check fraud, wire fraud, and counterfeit currency cases out of the Tampa field office. Whitfield was patient and methodical. She pulled every satisfaction of mortgage filed in Hillsborough County over an 18-month window. She compared signatures. She tracked notary seal numbers. She subpoenaed the county recorder's lobby surveillance footage going back 2 years. The footage gave her a face. A white man in his mid-30s, neatly dressed, often in a polo shirt and khakis, who appeared at the recorder's counter on multiple days across multiple months, paying cash, filing satisfactions on properties owned by people he was not. She did not have a name yet, but she had a face, a method, and a growing list of victims, and she had time, because federal financial crimes cases reward patience. By the time the Secret Service had built a preliminary case, Matthew Cox had moved his operation to Atlanta. He had taken out new mortgages on properties he had already double mortgaged in Florida. He had begun cycling through new, invented identities. And he had finished a complete draft of his novel about a mortgage broker who runs exactly his scheme. In early 2005, federal agents identified Matthew Bevan Cox as the suspect on the recorder's surveillance footage. The identification came from a former colleague at Cox's original Tampa brokerage who, shown a still photograph during a routine interview, said simply, "That's Matt. He used to work for us. He lost his license a few years back." The Secret Service moved quickly. They obtained warrants for his South Tampa condo, his storage unit in Brandon, and his vehicle. They coordinated with the FBI on the multi-state elements of the case. They prepared to arrest him within 72 hours. Cox got there first. Tipped off, investigators later concluded, by a contact inside the title insurance industry, Cox emptied his condo over a single weekend in March of 2005. He transferred funds across a chain of bank accounts held under multiple identities. He packed 2 suitcases. He disappeared. By the time agents executed the search warrant on Monday morning, the condo was empty. The storage unit had been cleared out the night before. The leased BMW had been quietly returned to the dealership on Saturday afternoon. What he left behind, however, was extraordinary. In a corner of the condo's second bedroom, agents found a fireproof file box bolted to the floor under a wooden desk. Inside, organized in tabbed manila folders, were copies of every fraudulent document Cox had ever filed. Forged satisfactions of mortgage, forged powers of attorney, forged driver's licenses, laminated and unlaminated, birth certificates ordered from 3 different state vital records offices, a spreadsheet listing 47 invented or stolen identities, each one with a social security number, a date of birth, a credit score, a list of bank accounts, and a notation of which properties had been mortgaged under that name. There was also a manuscript, 412 pages, double-spaced, bound by a binder clip, titled The Associates. It was a novel about a Florida mortgage broker who forges satisfactions of mortgage, layers multiple loans on the same properties, and stays one step ahead of federal investigators by inventing new identities at exactly the moments the old ones get burned. The protagonist was named Mitchell. The plot followed Cox's actual operation in almost every detail, including specific transactions that agents would later confirm by cross-referencing the spreadsheet. For the next 18 months, Matthew Cox lived on the run. He moved from Tampa to Atlanta, from Atlanta to Charlotte, from Charlotte to Nashville. He used at least 11 different identities during the fugitive period, sometimes maintaining several active at once. He kept running the scheme even while running from it. He filed forged satisfactions in Cobb County, Georgia. He filed forged satisfactions in Mecklenburg County, North Carolina. He took out new mortgages under new names on properties he had identified through online tax records. He pawned jewelry, gold coins, watches, and electronics at pawn shops across 3 states to convert proceeds into cash that could not be traced. He also kept writing. Agents would later recover a second manuscript, partially complete, on a laptop they seized at the time of his arrest. The second novel picked up where the Associates had ended, with the protagonist of the first book going on the run from federal investigators across the Southeast. The smoking gun in this case was not any single document. It was the file box, the spreadsheet, the 2 manuscripts, the dozens of forged satisfactions of mortgage filed across 5 states, each one stamped and indexed by an unknowing county clerk, each one a sworn public record asserting that a real lien on a real house had been paid off when, in fact, the homeowner had no idea a refinance was being run against the equity in their own home. The paper trail was so dense, so deliberate, and so internally consistent that it functioned as a confession written by Cox himself, then filed, ironically, in the same public records he had spent years corrupting. The arrest came in late November of 2006, on a cold afternoon in Nashville, Tennessee. Cox had been pawning a gold Rolex at a shop on Broadway when a Secret Service agent, working a separate financial crimes lead in the same area, recognized his face from a wanted notice that had been circulated to all Southeastern field offices weeks earlier. The agent backed out of the pawn shop, called for backup from the Nashville field office, and waited at the corner. When Cox stepped out of the shop, 3 agents were already in position on the sidewalk in front of him. He saw them. He turned. He saw the 4th standing at the corner. The lead agent, identifying himself, said, "Mr. Cox, United States Secret Service. Keep your hands where I can see them." Cox stopped walking. He set the small paper bag from the pawn shop on the sidewalk by his foot. He raised both hands slowly, palms out. "Are you Matthew Bevan Cox?" "I would like to speak to an attorney." "That is fine. Are you Matthew Bevan Cox?" He paused for several seconds. He looked at each of the 4 agents in turn. Then he nodded once. "Yes." The agents took him to the ground gently. There was no struggle. He did not run. He did not protest. According to the arrest report filed that afternoon, his only additional statement during the arrest was a single question, asked quietly as they put him in the back of the federal vehicle. "How long have you known where I was?" The agents did not answer him. At the federal holding facility in Nashville, Cox sat through booking without speaking. He gave his real name when asked. He gave his real date of birth. He declined to answer any other questions until counsel was present. Inside his short-term rental apartment, just blocks from where he had been arrested, agents executed a search warrant within the hour. They found the Dell laptop with files dating back to 2001. They found 3 driver's licenses in 3 different names, all bearing his photograph. They found cash in 3 different currencies stacked in a kitchen drawer. They found the second manuscript open on the desk, the cursor blinking on a sentence the protagonist had been in the middle of saying about a forged signature. A federal grand jury in the Middle District of Florida returned a 42-count indictment against Matthew Bevan Cox in early 2007. The charges included bank fraud, mail fraud, wire fraud, aggravated identity theft, passport fraud, and conspiracy to commit each of the above. Co-defendants were named, including a longtime companion who had assisted in the scheme during the fugitive years, and a small ring of straw buyers and notaries. Most of them took plea deals quickly and agreed to cooperate against Cox in exchange for reduced sentences. Cox's defense attorney, a career federal defender named Charles Marsh, advised his client to do the same. The evidence, Marsh would later say in court filings, was as comprehensive as any document fraud case I have ever seen in a federal courtroom, including, somewhat extraordinarily, evidence created by the defendant himself in the form of a 400-page manuscript that mirrors the charged conduct in almost every detail. Cox agreed, after extended negotiations, to plead guilty to the lead counts. The sentencing hearing took place in Tampa in November of 2007. Judge Daniel R. Hollingsworth, who had presided over the case from the indictment forward, allowed victims to address the court directly before sentence was pronounced. Eleanor Pruitt, by then 82 years old, took the stand with her daughter beside her. She had spent 4 years working with 3 different law firms to clear the clouded title on her home. She had received notices from collection agencies for loans she had never taken out. Her credit, intact for 5 decades, had been destroyed. She read from a single sheet of notebook paper, her hands shaking slightly. "I worked my whole life so that I could own my home outright and leave it to my daughter. I paid that mortgage every month for 26 years. I paid it off in 1998, and I framed the payoff letter, and I hung it on the wall by the kitchen, right where I could see it every morning. And then a man I had never met sat down at a desk somewhere and decided that my house was his. He did not break a window. He did not pick a lock. He just printed a piece of paper and walked it into the county office and handed it to a clerk who did not even look up. That was all it took to steal my home. That is what I want you to understand, Your Honor. That is what I want everyone watching this case to understand. A few sheets of paper, that is all." Margarita Reyes, a victim from Charlotte, submitted a written statement describing 5 years of litigation over a property she had purchased in good faith from a seller who, it turned out, had a clouded title because of one of Cox's forged satisfactions, filed 2 transactions earlier in the chain. Her statement closed with a sentence the prosecutor read aloud to the courtroom. "I bought a house. I did not know I was buying a lawsuit that would outlast my marriage." Assistant United States Attorney Marcus de Lien requested a sentence at the top of the federal guidelines range. He laid out the scope of the scheme over more than an hour, the number of victims, the use of stolen and invented identities, the years on the run, the continued offenses committed while fleeing, the manuscript. The defendant, de Lien told the court, wrote a how-to guide for his own crimes while he was committing them, and then started a sequel about how he would evade the consequences. He is not a man who acted in a moment of poor judgment. He is a man who has spent the better part of a decade refining a method for stealing houses through paper, and who found that method interesting enough to dramatize as fiction. The court has read the manuscript. The court knows. Judge Hollingsworth delivered his sentencing statement before announcing the term. Mr. Cox, the conduct in this case is not the result of opportunity. It is not the result of pressure. It is the result of patience. You spent years inside the mortgage industry studying the precise points at which the system trusts paper, and you spent the next several years exploiting that trust with a thoroughness this court has rarely seen. You did not steal from institutions that could absorb the loss without harm. You stole the security of homes from people who had paid for that security with decades of labor and discipline. You then went on the run and continued the same scheme in new states under new names. And while you were running it, you wrote a novel about it, which the court has now read in its entirety. The novel does not extenuate. It aggravates. It demonstrates that you understood, clearly and in granular detail, the harm of what you were doing, and that you found that harm interesting enough to turn into a manuscript you hoped to publish. The sentence was 26 years in federal prison. Restitution was ordered in an amount the court itself acknowledged might never be fully calculable, given the cascading effects of the clouded titles on subsequent owners and lenders across 5 states. Cox was designated to a medium-security federal facility. He did not appeal. He served his time. He continued to write. After his release, he reinvented himself once again, this time as a public commentator on title fraud, appearing in interviews, podcasts, and documentary segments to explain in vivid detail how easily a home's title can be stolen, how little most homeowners know about the public records that govern their property, and how the same blind spot he exploited still exists in every county recorder's office in the country. The clouded titles he left across 5 states have not all been resolved. Some properties, all these years later, remain in litigation between competing claimants. Some lenders absorbed the losses and moved on. Some honest buyers learned, years after closing, that the chain of title to their home ran through a forgery filed at a county counter by a man they had never heard of. A few sheets of paper, a stamp, a clerk who looked up, smiled, and slid the document back across the counter without reading it. That was all it took to steal a house. And in some of these neighborhoods, it still is. This case was unbelievable. But the case on the right-hand side is on a level I still cannot get over. Click it now.